Hello, everyone, and welcome to today's webinar with Cumulus Pricing Mobile App Services. My name is Scott Clonico. This is the third in our 3-webinar series on the building blocks of retainer-based income. So welcome, everyone, and thank you for joining us. To answer any questions beforehand, yes, we are recording this webinar. Should be available tomorrow. I'll do my best to get this ready tomorrow. It'll be up on both our website and our YouTube channel. My name is Scott Clonico. As you can see from my picture there, I am, in fact, the chair. I'm the head of content here at Cumulus. I'm a journalist who's been working in the industry for a few years now. With me is Bob Lawson. He is the founder of Cumulus. Previously, as you can read from the screen, he had a commercial role with a large mobile app development business, and he's got 15 years of working with businesses to productize service offerings. So thank you, everyone, for being here very much. And we've got a lot to cover, so we're going to go ahead and get going here today. Just a couple of housekeeping rules. As I said, yes, this webinar is being recorded, and feel free to ask questions anytime you want. There's a chat screen you'll see in your GoToWebinar interface. If you just kind of type a question into the chat, I'll see it, and then I'll pass it along to Bob, and then we'll get to the questions at the end of the broadcast. So thank you again for showing up. So this is our ongoing webinar series. This is webinar 3 of number 3 in our Cumulus webinar series on helping your mobile app development business get going here. You can see some of our earlier webinars at cumulus.com/webinars. We've got recording of our webinars number 1 and number 2 there live already, and recording of webinar 3 will be up tomorrow. 99% chance it'll be there tomorrow. You can also find us on our YouTube channel, youtube.com/Cumulus. Our next webinar is going to be delivering mobile app services to scale. That's on November 30th. Register early, so space is limited. That'll be the same time. That's 11 a.m. Eastern, and it's not going to be daylight savings time any longer. So it'll be 11 a.m. Eastern time is where you can Eastern U.S. time, when you can sign up for that. Today, what we're going to do is we're going to have a short revisit of what we covered in webinars number 1 and number 2, and then we're going to move on to the meat and potatoes of the webinar, how to tackle pricing app services. We'll talk about pricing methods, how to determine your pricing, and how to know, in the words of the game show, when the price is right. As I said, this is being recorded, so feel free to ask any questions that you'd like with using the chat interface. Okay, now I'm going to hand things over to Mr. Lawson, and he's going to take it away. And
thank you, Scott. And thank you, everybody, for taking the time to join the webinar, and welcome back to the many of you who have attended the 2 previous webinars we have in the series. For the few that haven't actually tuned into the earlier webinars, I just want to give a little bit of a summary of where we're really coming from with these webinars. When we talk about mobile app development, we're talking about the mobile apps that are developed by businesses. They might be consultancies, they might be software development companies, building apps for SMBs or startups of app entrepreneurs. So that's what we're talking about when we're talking about building recurring revenue services. This has really come about from a good year's worth of research, talking to many different businesses around the world who build mobile apps for their clients, to try and understand their challenges, their approaches, and how they've gone about solving the problems of moving away from a project-based revenue stream into building a more sustainable, more visible revenue source for their business. And what we've tried to do here is we've tried to boil down the common practices and, if you like, the DNA of how they've gone about solving these problems, picking the best parts from all the various businesses that we've talked to over the last year or so. So hopefully you'll get something here that will start sparking some ideas that you can apply within your business. So before we go, as Scott says, I just want to spend just a couple of minutes just going back over the stuff that we covered in the previous webinars. Don't worry, I won't dwell on this for too long. This is really just so that the people who haven't actually tuned into the true previous get the context in which we're going to be speaking later on in this webinar. So we've talked about this before, the general problem that most mobile app businesses have or have had in the recent past, where almost all of their income is 100% reliant on winning new projects. You win a project, you deliver the project, your revenues rise, your revenues fall, and you end up with a series of humpy revenue streams throughout the life of your mobile app business. The problem you have, obviously, is you've got a mismatch between your running costs and your income stream. Your running costs are typically flat every month, making payroll, paying your rent, your running costs of your business. So the problem you have running the business, as those of you running businesses will know, is that the problem you have is that you've got peaks and troughs in revenue, and during those peaks, you've got to hold on to cash reserves, and those cash reserves effectively make it very, very difficult for you to plan, certainly make it very difficult for you to know when you need to add your new headcount to your business. So that's one of the key problems. It creates nervousness, it creates growth anxiety within the mobile app business. So what we're really talking about here and what we've talked in previous webinars is it's all really about trying to find a way in which you can build an underpinned revenue service for your business that will basically allow you to not have to suffer any of those troughs in your revenue, so that you can actually start running and building your business with more confidence. And ultimately, and we do have customers that are very much headed this way, getting to a situation where the service revenue being generated from your business more than covers all of your running costs. So effectively, all of your project revenue is profit that falls straight to the bottom line. Obviously, a great situation to be in if you can get there. The other part that we talked about in the other earlier webinars was how to think about the complete mobile app lifecycle. So typically, mobile app development agencies focus very heavily on the create and build phase, but traditionally haven't really focused very heavily on the optimize phase. So typically the revenue is generated over, say, a 4 to 5 month period, whereas ultimately the complete app has a life cycle of anything between 2 and 3 years before you would typically retire the app, rebuild the app, and then relaunch a new version of the app. So there's clearly an opportunity there for mobile app businesses to generate a substantial amount of additional revenue and move away from this total reliance to just winning new projects. The second element to this is to think about building services based on the type of service you want to deliver, the level of strategic service you deliver, so that you can actually start presenting services to clients in levels, so that you can allow it to match the services you offer, match specifically with the individual needs of your clients. So what we talked about in previous webinars was building services that were on a reactive basis, telling people this is what's happened during the month, or a proactive basis, which is telling them what's happened and then recommending things that could be done to fix it, or ultimately getting up to a fully outsourced managed service where you're effectively acting as an extension to their business, the product manager or the digital marketing manager of the mobile app, and once the app actually goes live. Taking these two things, building them onto a quadrant, gives you a structure that you can start thinking about your mobile app development services. And what we have here is basically a 4x3 box, 12 boxes, that allows you to start planning how you could structure the mobile app services that you sell, possibly in a way to actually describe it to your services, but certainly a way in which you can actually structure these services within your business. And ultimately, as I'm showing you here, for different clients, you can create different types of service packages so that you can specifically custom fit those packages for that individual client, delivering services at different levels, or as the example here, not delivering a service in a specific area if it just doesn't make sense for the individual client. And ultimately, going back to this product lifecycle, this app lifecycle view, it gives you a huge opportunity to completely differentiate yourself from the run-of-the-mill mobile app development business out there by offering services that cover the complete lifecycle of the business, not just being limited to the build phase, which we know from talking to people that are running this system, does allow them to completely differentiate themselves, stand out, and actually win more projects in the first place by the fact that they can say they offer a more comprehensive support package for the customer than just building them an awesome app. That's really me trying to give you 2 hours worth of webinar in a couple of minutes. Hopefully it's been enough to just give you a picture for what I'm about to now cover, as Scott mentioned, the meat and potatoes of the app. But just in summary, what you should hopefully gathered from the previous webinars, or that quick summary I've given you there, is that there is a way in which you can build services and deliver those services to clients, and clients will pay for it, provided you're providing them with services that help them drive the right outcome for their app. That's obviously critical. They'll pay money if they know that they're going to end up with a better result from their app in the first place. It's also important to sell these services right from the start. It's quite difficult when you're going through a a build phase of a mobile app to then start talking about additional services as you go through. But if you actually say at the beginning, very much like this picture here, that this is the way we operate, this is what you'd expect when you run with us. So when we get towards the end of the build phase, we're going to be talking to you about the optimization phase. So these are the services that we're going to be talking to you about, and obviously you're going to have to fund as the app launches and goes into its first year, second year, third year of the life of the app. It's important, as you can see within that 4x3 matrix, to position the services progressively so that you can get your customer on the right initial service, something that's right for them at that particular point in time, to draw a line specifically in terms of what those services will cover, and then allow you to discuss how you can then progress them to a higher level of service as their needs mature and the demands around their mobile app change. And the last point of this is it's obviously important to make sure that the services you offer them are visible. It's all and well delivering them a great app and an app that's stable, but if they don't understand and see the value of the service that you're actually delivering for them, then they'll struggle to see why they would want to continue paying. So it's really important that your communication is strong and that you're regularly updating them on the good work that you're doing to keep their mobile app that you built awesome from day one into day through and day three. Okay, so now with that as a backdrop, what I'm now going to talk about is how you could approach pricing mobile app services. This is probably one of the most difficult things to do in any business, is working out what price you can actually charge your customers. There's always the anxiety of, are you pricing it too low and leaving money on the table? Are you pricing it too high and being outbid by your competition? So what I'm going to talk about here are 3 typical models that I've seen being used that you could maybe look at applying within your business. First thing I've got to say though is that, and this is something that I'll come back to quite a few times, is that it's well known that it's much harder and much more expensive to win business from new customers than it is to win follow-up business from existing customers. And some reports say it's anything between 5 and 7 times more expensive to win a new customer than it is to retain or win follow-up work from an existing customer. The other thing that's staggering from talking to, as I say, lots and lots of mobile app development businesses is just how awful so many mobile app businesses are at doing this. Now, it's possibly a factor of the fact that the mobile app industry is so buoyant, there are so many projects out there that you don't have to go chasing repeat business from existing customers, because you've got a queue of people at your door looking for you to build new mobile apps for them. But you'll also know to your cost that very often the first mobile app you build for a customer, or the first project you do for a customer, is the one that you'll make the least money on. So not only are mobile app development companies losing out on winning on mobile follow-on work, but they're also losing out in the fact of winning much higher margin work by knowing the client, understanding the issues within the client, being able to price the next contract more effectively, and ultimately make much more money out of the client over the longer term. So that's something that I'm going to come back to quite a few times over the next few slides. Okay, so what we're going to talk about here are the building blocks for mobile app development services. And I'm going to talk about 3 different pricing models. Value-based pricing, that's value-based to your customer, how they would actually view the value of the service they offer to you, which is a very common way to price services. The second one, which is a little bit more unusual, is it's a bit of a twist on the value-based services, but this is value to you as your business. How would you price it based on what outcome you want to get from the service you're delivering to your client? And the third one, and probably the easiest one in the group, is cost plus pricing. How much does it cost to deliver the service? How much margin do you want? Boom, that's the price you're going to charge it to your customer. So the key question you always get asked is, what's the right approach? Which is the best one to pick? And unfortunately, if you were to talk to any management consultant, they will immediately throw it back with a question to you, and I'm afraid it's the same here. It really depends on what you want to achieve, which I know isn't very helpful, but hopefully I'm going to try and give you a little bit of more meat on the bones to try and show how maybe you can figure out which one of these approaches fits your business best, or maybe a blend of the approaches. So this is what I mean. There is actually something that we need to think about here. You've got to really be thinking in 3 different ways, I think. You've got to be thinking about what you're really trying to achieve. Are you wanting to build strong, recurring, predictable revenue for your business? So your motivation there could be you're looking you're the business owner, you're looking to sell your business, one of the best ways to build the value in your business is to have a very strong, very visible recurring revenue stream for your business. So your primary driver there is to bring cash into your business every single month in a very predictable, contract-backed way. The second one might be the thing that I talked about before, is you find it difficult to stay in touch with customers. We hear lots and lots and lots and lots of stories of people that basically do the build, ship, high five, see you later, and don't really have any mechanism or means to stay in touch with the customer. So they know that they're losing out on not just working with a good customer, but also the ongoing recurring revenue stream that will flow from that customer. And the last one is the bit I've touched on before, is your real motivation there to win follow-on work? So not to be reliant on winning new projects to keep your technical teams busy. There's obviously a method there where you can actually build services that would generate recurring projects just from your existing customer base. Okay, so before I go much deeper, I just wanted to just cover this. So what do we really mean, and what are the different methods of achieving regular income? And there's a whole raft of different methods out here, but what I've tried to do is boil these down into three main types. A very common one we see out there is prepaid or block hours, or all kinds of different names for that. But effectively, this is saying to the client, every month you will pay for 100 hours, 200 hours, 500 hours worth of development time, and you can draw that down over a period of time, draw more one month, draw less the next month, so that you can effectively allocate your development team and reserve resources within your business to support that client's ongoing development needs for their app. The other one is reselling vendor services, not a particularly profitable method, but a very predictable and very solid revenue stream. It's low effort on your part. You're effectively just saying, I'll resell you Azure services or resell you AWS services, possibly adding a little bit of margin on top, or maybe getting some sort of revenue share from the software vendor. It does allow you to deliver services, with virtually no effort and probably very little technical expertise on your side. The third one is really when you start to get a little bit more strategic with your customers, to become that retained consultant or trusted advisor. So you might not be materially involved in developing the mobile app, but you are the go-to guy they come to when they really want to know, this new technology coming out, does it actually apply to our business, or is this potentially just the mobile app developers wanting to play with a new shiny toy? And the last one on the list is managed teams or skills augmentation. That really comes in at two different sides, two different ends of the spectrum. We see a lot of people that are delivering skills augmentation, what you could describe at the bottom end of the scale. So they might be offering cost-based, $25 an hour for iOS developers in an offshore or nearshore model. Or at the other end of the spectrum for the very, very large enterprise clients, where they've decided that their future is to build an in-house mobile app development team. You might find that there's an opportunity there to deliver managed teams, where effectively you put a team of your people managed into the client's office, and you therefore deliver the job of work that's actually controlled by the client. That could be in their office or could be in your client office. So these are the sort of four different blocks of different types of regular income that we see being used with all the customers that we've worked with over the last few years. So the other thing I just want to talk about before I move on too much is the perfect customer, because I think that's important. Going back to the view of the graph with the humps and the dips where you're not actually making money, very often what happens is you end up working with the wrong customer at a time when you're really just chasing revenue. So if you can start with a view, particularly when you're building mobile app services that we're talking about here, with your perfect picture of your perfect customer. So typically this would be a customer that sees apps as being strategic to their business, possibly mission critical, but certainly important to the way they see their business being run in the future. They understand how software development works. You're hopefully going to be dealing with a software developer or somebody who's involved in IT, maybe a business delivery person, not the somebody who really doesn't understand how this thing goes. So there's never really an end point with software development, as you know. It never ends. You never get to the point where a piece of software is feature complete. And if you're working with somebody who understands that, then you'll find it's a much more collaborative working relationship. The other thing is to be clear that that there are various cost phases within a project. So there's a cost to build, there'll be a cost to maintain and run the app, there'll be a cost to physically deliver the services that the app actually requires to run. You know, a classic one there is push notification services that are typically provided by third-party providers. And also a cost to continually involve, not in every case, but in most cases, we see people working on an agile software development process. So they will work with an MVP, and from an MVP they'll have a backlog, and then they'll have MVP 1.0.1, 0.2, 0.3. So you're getting the client into a routine where they know that there's going to be an ongoing rolling program of work, which obviously is good for them, but also for your business is obviously good for you as well, because you can actually see that there's an ongoing piece of work that you can be dedicating your technical staff to. And the last bit, and the obvious bit, is that you know they have the cash flow and you know they have the commitment to follow this on. That probably one of the best acid tests to know whether or not this is a good customer to work with is to really test that commitment to say, are you willing to continually invest in this app, or is this project a one-off hit where you want me to deliver your app for, say, $25,000, and then it's a case of see you later? And if they do say that, then obviously that's when the alarm bells should really start ringing. You should be thinking, is this really the type of customer I want to work with? Because as I've said before, these are very often the customers that kill your business. They're incredibly demanding on the way in. They don't really see this concept of that software development is a continual process, and ultimately they want the moon on a stick with a budget of a fraction of the price. So hopefully, again, as a byproduct of thinking about pricing and thinking about services, this will give you a way to make sure that you are more focused on finding the clients you want to work with and delivering services that are very much aligned to how they want their software development and their app development to run. Okay, so the first one of the model I talked about there was value to your customer-based pricing. So coming up with a price that they see as being a good fit of cost to value. And ultimately, as I've talked about with an MVP build process, you'd have an income, which ultimately is a cost to the client, but I'm looking at this from the income from the mobile app development agency, which is an initial cost from your client to build the original app. You then deliver an ongoing app service and maintenance service of some description, and that gives you that ongoing recurring revenue stream. But the problem was, how big should that income be? So one of the ways you can approach this is to come at this by understanding how much the initial MVP of the project was, and obviously what the ongoing roadmap of commitment needs to be, and working out from the customer's point of view the percentage of the initial build costs and factoring that into the overall maintenance and management cost of the app. The second thing, though, you've got to be thinking about is also from their point of view, from their business case point of view, what is the ROI that they expect to get out of the app? If you can get them to tell you that right at the start of the project, not only does it get you to understand really what their commercial objectives are, and from their commercial objectives, you can help them refine what their minimum viable product features need to be, but also it gives you very useful information about what sort of money they expect to save or money they expect to make from the product, which also then gives you an inkling for how much they're willing to invest in the app going forward as a percentage. Whether this is a formal thing saying you expect to make $20,000 a month, so I'd like you to pay me a 5% stake in that, or whether it's not, just using this as a way where you can actually then level set and come up with a price that you think your customer would be comfortable to pay. So back to the sort of service blocks view. The key here in terms of what price you would pay relates very much to how strategic your involvement with the client is, how strategic you want it to be, but how strategic they want you to be involved. Obviously, the less strategic, the reactive, which for the people that have tuned in before, they'll know that that's the level of, I'll tell you what's happened within your app, I'll tell you how it's performing, I'll tell you how many downloads you've got, I'll tell you how many retained users you've got, and how well the app is performing. Or whether it's proactive, where you really start to suggest areas in which they can improve the app, or ultimately to the managed service where you're effectively acting as their outsourced mobile dev team. So the level there obviously determines very much the level of price that you can pay. And some people talk about there being a value curve within mobile apps, again overlaying it on these sort of service blocks or similar service blocks, where if you're really just delivering an operational function, you're simply making the app run smoothly and you're managing bugs and crashes, then your operational value is going to be high, but your ultimate value to the company, the customer, is going to be very low. Whereas if you can become more of a strategic partner to your customer, then obviously the value of the service you can charge will be high, the margin you can charge will be high, and ultimately the revenue you generate from that client will be high as well. So I'm just going to give you a bit of an example just to sort of put some numbers on that. So imagine we have a client that's built that you built a mobile app development, a mobile app real estate app for, and just to keep the math simple, the total MVP build cost was $25,000. So to lay it back on that value curve, what we see typical is that when you're offering just a very low operational service, you could probably get away with charging about 1% of the initial build cost as your service fee. But if you're actually delivering something which is much more strategic, then the going rate seems to be something around 10% of the MVP per month that you could charge as a fee. So to put that in some sort of perspective, on that $25,000 build, and just factor this up or factor this down depending on what you see as a typical mobile app development project for your clients, that could be anything from about $250 a month to about $2,500 a month as a fee based on this value pricing approach. Is it worth it? It's very often the question that I get asked when I talk about this in some of the calls that I did following the last webinar. Some people were saying, it seems like an awful lot of work for not an awful lot of revenue. But the key point here is that, if you get, say, 10 customers that you're providing that mid-level of service for, it doesn't take very long for that to build up to a relatively substantial amount of money. $150,000 a year could go quite a good way to covering your rent, your admin costs, and maybe some of your overall running costs. And once you get into the routine of when you win a customer, the expectation is that that customer will then buy your retained services. For every customer you're bringing in, it's not just the initial project value, but it's also the ongoing monthly services that you're delivering that will that'll be the cash that will be flowing into your company. So just to summarize what we're talking about there in terms of value-based pricing, the best way to start this is to start by looking at a percentage of the cost based on the initial minimum viable product of the build phase, to then apply some sort of underlying view on the value that you expect to put in the app. So as a percentage of the overall cost savings or as a percentage of the revenue gain that they expect to get from the app. Overlay that with how strategic you expect your role to be in. And one suggestion, as I've covered a number of times in the past, is it can be quite good to start low and then become more strategic as you get to know the client, so that they then see the value you can add, and then you can start increasing the revenue that you're generating from that managed service. Advantages of the approach, I see there's been quite a lot of advantages, specifically being around the fact that you can offer a very low entry price. So if you think the client is very cost sensitive, isn't really bought into the long-term financial commitment, then you can offer them something, say, around the $250 to $300 a month mark that gets them used to paying you monthly, keeps that dialogue going, and keeps you close to your client. You can offer a range of services based on the type of need the client has, so that you're not just coming up with a one-size-fits-all or just a very binary bronze, silver, gold type service package. You can be very specific about the things that are included in that and not included in that, so that you're very clear what you will deliver for that fee and what you can't afford to deliver for that fee. And ultimately, at the very lowest level, you can deliver a lot of this stuff without absolutely no changes to your business model, so you don't have to think about investing in new teams of people or new skill sets, because you're simply providing some information to the client that will help them make decisions better. The drawbacks is that some see this as quite a complex approach. It's been mentioned a couple of times that to have 9 or 12 service blocks, can be quite complicated to work out how you deliver what services to who. It doesn't give you a defined rate card because your pricing effectively is dynamic and flexible. That's got advantages and it's got disadvantages, because clients will often ask you for a definitive cost, and you're probably going to say, well, we're going to have to discuss exactly what your needs are before I can give you that cost. But the flip side on that is that it does mean that you really do understand what they're able to pay, willing to pay, so that you're not leaving any money on the table. And the last bit on that is you really do need to understand the business case of the customer. But I'd say that most of you probably spend time trying to really understand what the client wants to get out of the mobile app before they start. So you probably do have a good feeling for the business case in terms of, is this business efficiency they're looking for, cost savings, or is this actually net revenue gain to the business, to the bottom line of the business? Okay, number 2, and this one for me is probably the most interesting of the stack, and possibly something that you've not heard of before. This is value to you pricing. So this is you deciding what you want to charge based on what you want for your business to get out of this. You can sell it as a profit, you can sell it as a no-cost service, sorry, a cost I should say, or indeed, I know of some people that are actually selling it as a loss. They're effectively giving it away as a free service because they know what they're going to get back in return. So think of this service as baiting the hook. That can be quite a sort of commercially brutal way of thinking about things, where you're trying to actually hook your clients into a relationship. So, but think of this more as the way of you're offering something up with the view of getting something much bigger back. So the whole idea is you're baiting the fish to catch the bigger fish. So you're offering up some cost or some value to your client with the expectation that you're actually going to get something much bigger in the long run, whether that's a stronger relationship with your customer or whether that's long-term revenue flow from that customer. So taking the same view again of the initial build phase, with the services being sold along the bottom, the idea here is that as you're delivering the services, it's throwing off the work for V1.1, V1.2, V1.3, so that just as a result of you having these services, you've got that ongoing dialogue with your customers, which is creating the need for you to then go and do additional project work for your client. And the idea here is that obviously within all the various phases, that's generating additional profit. And from some of the numbers that I've seen talking to clients, it is quite interesting when you look at the margin they generate from the initial phase, and I covered this earlier, that they'll make a lot less money as a percentage of the overall cost on that initial phase. But when you get into the follow-on phases of the app, once you've built that relationship with the customer and you've then done a number of feature enhancements, you can then start looking at either driving greater margin from each of the sale, or also keeping the margin the same and driving down the overall cost to deliver the services at a cheaper cost to your client. Obviously, you then have that flexibility to go either way. So the idea here is that by delivering a small service, you'll generate a very large amount of additional income for your agency. But the other way to look at this is actually as a loss leader. So we do have people that say, okay, they will deliver a well-controlled and well-scoped out series of services that will allow them to keep that contact with the client, to keep the regular dialogue going, to discuss the future development possibilities with the app, and then start delivering those additional projects off the back of it, which obviously they're delivering for a fee. They're not delivering those for nothing. And typically what we find is that the green shaded in the area at the bottom of this is where they would typically concentrate those services. So they're not going to be offering a fully outsourced managed service with a lot of labor and a lot of effort at no cost, effectively as a free service. But what they will do is they'll offer automated information-based services that create the conversation points to then allow the mobile app development company to discuss with the client how they could actually help them improve the outcome of the app by additional development, or by helping them with engagement campaigns, or driving up greater retention within the app. So as a summary, this can be obviously a great way to stay in touch with your clients, particularly if you're saying to the client, we will do this for free. I don't think there'll be any customer that's come off a very positive MVP build of an app that's going to say no to your offer of giving them a free ongoing service. It also is a very good way to keep your interests as a business aligned with your clients' interests. You're not seen as the person who's taking a monthly fee and not doing any, what they could say, tangible material work. But what you're doing is you're sitting down with them every month or every quarter and discussing the areas of improvement within the app, and then planning that block of work based on how you can actually make that app better. The other thing on this is, because you're actually selling into an existing customer, you can much more effectively set the expectation of margin, because you know typically what that customer's like. And as you both learn to work together, you will become much more efficient in the way you deliver projects, and therefore you have the opportunity to deliver more profit if that's your motivation, or deliver the service at a lower cost. And obviously it's a phenomenal way of building a long-term retained relationship with the client. They're going to stay with you because you're offering them a lot of value, and their interests are very much aligned with yours. Obviously, the challenge here is that you can build services and deliver those at no cost, but the challenge you have is that really knowing when the customer actually is going to deliver the projects for you. It's also goes without saying that you're not delivering any margin from the services, so it can be harder maybe to justify to your finance guys, or maybe some of the other people within your business, that you are spending time with that client but not generating any direct revenue from that client. But I think what you have to do is change your mindset round and see that really as a customer management fee, or a customer development service, rather than actually seeing it as a service that you're initially expecting to get money back from the client. And the last bit on this is probably the fact that you need to be very, very careful about drawing boundaries around about that service. If you're delivering just a reactive service, it's very important not to get drawn into going beyond that without that going into a fee, because as soon as you set that expectation that you'll deliver something beyond what you said you would, it becomes very difficult to then retrench and say, no, if you want me to keep attending that meeting, you need to start paying me a fee, or you need to change the way the relationship, the service blocks that you're buying from me. The third one, and probably the easiest one, and the one that I'll probably spend less time on because I think it's quite easy for everybody to understand, is cost plus. So this is knowing how much it costs to deliver a service, adding your margin, defining your price. So it's clearly the crudest and simplest approach, but probably the easiest to actually work out. Well, on the understanding that you really do understand the costs within your business, which actually is quite interesting when I've talked to a lot of companies, just how little time they actually spend on individual customer profitability. There's quite a lot of very, very large and very, very successful mobile app development agencies I talk to that don't actually know what the individual profitability of each of their customers are. So that actually can be quite difficult if you're then going to say, okay, now I'm going to deliver an ongoing service to your client, whether that service is being charged at a margin or being charged as a cost or at a loss. To then be really, really clear what the actual cost is of developing that. So here what I have is this sort of typical stack that I'm sure all of you will recognize, thinking about all of the costs that you have within your business, and then having a really clear understanding of what resources you do need to deliver that service. All of the costs, all of the loaded costs, thinking not just of the people that are physically involved in delivering that service, but also a share of the operational costs, your sales, your accounting teams, your CEO, or maybe some of your senior management, which aren't traditionally billable. Taking a share of the premises costs, so that's systems and operation software, obviously the heating, lighting, internet, and the cost of computing. To think also about the actual consumables you have within delivering that service. Now that might be push notification services if you're selling engagement as a service, or analytics packages if you're serving some sort of data as a service. and then ultimately then deciding how much cream you're going to put on top, how much margin on top. But it's very important if you're going to go down the cost model to really truly understand what your costs are before you can really decide exactly how much profit you can make, or how much the service costs to deliver and how much profit you can make. And as I said, it's quite interesting when you talk to lots of mobile app development agencies that they really don't have a particularly scientific approach to this. There's very much a finger in the air. How much can we get away with charging? How much will the customer be willing to pay? Some of them, yeah, there's a bit of science, particularly if they're doing a fixed price bid. They'll spend a lot of time really understanding this. But on slightly looser engagements, where we'll get you to this stage at this time for roughly this cost, where it's maybe been done on a more agile basis rather than waterfall. It's actually quite incredible how little time companies spend actually properly costing this stuff out, or even going down this semi-scientific route of, the total amount of resources required to deliver this divided by the number of man days times labour cost and margin. But I'm sure you've probably got other ways in which you price projects as well. But that's the typical feedback I get when I really get people talking candidly about how they do this. So the advantages, obviously, of the cost plus approach is it's something you'll be familiar with, because you'll be probably doing something similar to this to actually price up the projects that you're actually delivering for services. It's pretty easy to price if you really do understand your costs, and you can then set a very clear margin on top. And it probably is the easiest way to build a clear rate card. You can say to people that regardless of the amount of money you've spent with us to deliver the app, we will charge you $250, $300, $400 a month for this ongoing service, regardless of, as I say, of what the original project is. So for some customers, that will be seen as phenomenal value because they maybe spend $100,000 or maybe $200,000 with you to build the app. On others that are maybe lower price, where they've maybe spent $15,000, $20,000 with you, then obviously that becomes a much higher percentage cost to them, so it might be a bigger barrier. But in general terms, it might be an easy way to do it. The drawback, obviously, as I've said, is a one-size-fits-all approach. You're not really then aware, or you're not fitting that service to the overall initial budget of the client. And I think clearly there's a huge risk there that you're leaving money on the table for a big project where they've invested a considerable amount of money, and they're concerned about making sure that that ends up delivering value into the future because it's a strategic decision for the company to build the app. Then they might be willing to spend a considerable more amount of money than just the rate card service that you've actually presented them with. So in reality, unfortunately, this is really very much a case of it's probably going to be a blend of all three. You're probably going to come up at this with an understanding of cost plus to start with, where you'll be looking at it saying, I know how much it's going to cost me to deliver this service. I know roughly about how much profit I need to make for it. So that's your starting point. You'll then probably benchmark that against the price point that you think your customer is most likely to pay, knowing how much they originally invested with you. So you'd probably flex that cost plus up, maybe by having more hours in there, more man hours to actually deliver a more engaged service. And ultimately, you'll probably then have to say, well, what are we trying to achieve out of this? Do we want to actually make real margin off of this, or are we happy to just cover our costs, or ultimately do we want to offer this as a free service to allow us to really get ourselves well embedded with that client and really be seen as their trusted advisor? Okay, so the last piece on this is trying to set the price, and anybody running any business where they're really trying to work out what sort of price a customer will pay for, particularly if you're bidding for a piece of business, which I know is not really what we're talking about here. We're talking about the services that come after you've won that project, but it very much can be throwing darts at a dartboard with a blindfold on. It's really difficult to actually hit the target. The one key thing here is really understanding what prices apply wherever you're based, and we've got people on this webinar pretty much from all over the world. So you'll see that there's very different price points within different countries. Between North America, Central America, and South America, there's huge difference in the application, the mobile app development costs, let alone the investment and commitment from those businesses to continually fund that app once the app goes live. In Europe, rates are very similar to the rates in North America. So there's potentially some comparison there, but it's really important for you to understand how it applies to regions. So what I presented there really are the typical European, North American rates. They could be higher, they could be lower, depending on your specific market conditions. But ultimately, it's really all about trying to come up with the most balanced view of pricing. You don't want to be leaving money on the table. You want to make sure your customer is happy and feel that they're getting value for what you need. But you also want to make sure that you're not selling it so cheap that they say yes too fast, because ultimately that's a good indication that you've possibly sold it just a little bit too cheap and are leaving money on the table. If you sell it too low, your customers won't see value in it. So, again, back to think of the scenario of somebody having spent $200,000 with you, and you come up and you say to them, we'd like you to spend $200 a month in these support services, because then we'll help you drive a better outcome for your app. They're probably not going to believe that that's going to be particularly valuable. So you've really got to figure out, well, how much really should I charge that customer? If you charge too high, you're going to get resistance. They're going to have to think hard about whether they're actually willing or able to pay that money ongoing. And you're probably going to get customer churn, particularly if you're not very good at making sure that they really do see the value they're getting from the service you're delivering from them. And you'll end up with churn, which is obviously the opposite of what you're trying to achieve. The whole point of this is actually to get you into a position where you can build that much stronger strategic bond with your customer. The way that these things are typically done is that you'll come up with a series of service blocks that straw men, some people call them, for the services that you'd typically be looking to deliver. So again, back to that matrix, that 3x4 matrix, to come up with a series of services that you can describe to your customer or a prospective customer, and some candidate prices that you think would be acceptable based on the types of project value you're delivering for them, or dependent on the types of industries you're selling to, because obviously some industries are going to be more price sensitive than others, or some industries are going to be more mobile first orientated than others, who are willing to invest more aggressively in mobile apps than maybe some traditional engineering services, for example. And you're going to go to a friendly customer or candidate customers, probably describing it very much in the third party, so saying, we're thinking about offering these services to our customers. Is this something you would think others in your position would have value with? So you're not asking them, would they pay for it? You're asking them, would you be, somebody like you working in another business, is this something that they think that they would see value in? And in terms of pricing, which is clearly the most important thing, particularly for this topic, you'd be talking to them very much about what sort of price range do you think these people will be willing to pay for, either based on a percentage of the initial build cost, or just as an ongoing fee based on how strategic the app or how strategic the services are you're delivering within the app. And this is the last bit, which actually, although it's at the bottom of the slide, is probably more important, that you're definitely not going to get it right first time. And you're definitely going to find situations where it's just not right. You haven't got the pitch right, or you haven't got the services right, or you haven't got the price right. So it's really important to create a feedback loop here and do the learn, refine, retry, and don't give up. This is important. And this is something that will deliver a lot of value, but it's probably not something you're going to nail absolutely first time. So you've got to make sure that you test and refine and test and refine. And when you have clients that you talk to about this and they don't buy, is really understand why they don't want to buy and what the issue is, so that you can then feed that back into your process, refine either the way you describe it or the packages you're delivering, and ultimately have a package that at a price or a service level that fits better with your next client that you talk to. So as an overall sort of suggested approach, to create a series of service offerings at different price points that allows you to scale up, scale down, depending on the types of budget and the types of need that your clients have. To try and not get into a situation where you present a price and then offer them a discount. If they say that's too expensive, can you not do it for that? Because ultimately, if you drop the price too quickly, then you're potentially destroying a lot of perceived value in the service you're delivering. But offer them maybe a 3-month discount on the service, just so that they can actually experience the service and understand the value that delivering from them, but with a promise that price goes back to full price at the end of that 3 months once you've actually delivered the service. The other alternative is, again, on these service blocks, is to start at a low price and then scale up as their service needs grow. But as I say, the important thing here is to not to be seen to be discounting straight off the bat, because ultimately will destroy the value. Okay, and some thoughts to finish, and then we'll be open for some questions. Is unfortunately there isn't a magic formula. There isn't a spreadsheet that I can give you that you can then just punch in some numbers and it'll just spit out the magic number and the magic services that you can deliver. It is going to be a mix of understanding the customer value, the customer need, their propensity to pay and propensity to invest, understanding what value you want out of the service, whether you're selling it as a loss leader, whether you're selling it as a service that you want to actually make material amounts of money because you want to build value within your business. Or maybe building it as a cost plus model where you've clearly got to have an understanding of how much it's going to cost to deliver that service so that you can decide whether you're going to sell it as a cost plus or as a loss leader. Market testing is going to be key, not necessarily just with your favorite customers, but with your candidate customers. And in future webinar, we're going to talk about where we think the best fit is for selling these sorts of services, because there is a difference between the Fortune 500 companies and the app entrepreneurs. There's a huge spectrum of users within the mobile app industry, or customers within the mobile app industry, and clearly this fits very nicely with a number of segments within that market, but not every type of customer is going to want to buy these services. And the last bit is to be bold and be confident, is to not approach this in a sheepish way saying, we think this is something you might want to have. Is to be bold and say, if you really want to be serious about delivering the right outcome from your app, you need to be thinking about the ongoing commitment to your app, and we need to be thinking about how we can work together to help you get the best result out of your app. So be bold, but not so bold to the extent where I think the first presentation, or the first one of this webinar, talked about hitting a home run. You don't want to be sitting there trying to hit the home run every single time and get somebody onto a $5,000 a month fully managed contract. You want to be thinking about bringing them on slowly so that you understand the client needs, and then ultimately the client gets happy with you. And one just bonus thing at the end of this presentation is what's really quite interesting here is how a lot of mobile app development agencies are actually kind of turning this whole thing round, and they don't necessarily see this thing just being about building residual income. But what they do see it is a means of actually positioning themselves differently so that they actually win more clients in the first place. They're telling a different story from the average mobile app development agency. They're telling a story much more about having a long-term commitment and having a long-term investment with the client to drive a much better outcome for it, and ultimately increasing their win rate. We have some examples of people that have taken the win rate down from 1 in 15 down to 1 in 10 down to 1 in 8 just by showing that they offer a service substantially more than the average mobile app developer out there. A couple of things just towards the end of things that we can help. Obviously, we do these webinars, but also there's a whole range of material that we have that you can get from our website that'll help you. We've got white papers that actually gives you the full webinar series in effectively a 25, 26 page white paper if you want to read it. We've also got playbooks that show you how you can take some of the specific services and turn that into services, and how, in terms of how you would sell that on your website and turn it into your sales pitch. And we've even got marketing material that you can take and rebrand and use to either market test your services or use that as lead generation material for your company. And just a little bit about Kumulos for the people that don't know about Kumulos. Kumulos is a white labeled delivery platform for mobile app development businesses. It has now 5 services under the platform. We have analytics, push notifications. We also, within analytics, we've got a reporting service, App Store optimization. We've got mobile app hosting and building services. We have the ability to completely white label the platform. And the new service that we just recently launched is a crash management service that allows you to monitor, diagnose, and then allow your techs to fix any crashes you have in your app once the app goes live. So what we've built within the Kumulos platform is a real complete lifecycle platform that allows you to use Kumulos to deliver services across the entire lifecycle of the app. And that's me done. Scott, over to you.
All right. Thanks a lot. Thanks a lot there, Bob. Thanks again, everyone, for attending the webinar. Just to give you a little shout out, heads up for our next month. So next month, our webinar will be on November 30th at 11 a.m. Eastern U.S. time. And that's on how to deliver mobile app services at scale. So like all our other webinars, is when it's filling up fast. So be sure to register. You can register at our website at cumulus.com/webinars. We got time for just a couple questions here. Thank you very much for everybody for all your patience. And these are questions that we've been submitted from the audience. And our first one here is from Matt. Matt says, "Hey guys, I've turned into the full series. Thanks, it's been awesome." All right, thank you, Matt. Quick question, not about pricing, but about app services. The examples you give seem more oriented towards business to consumer apps. Are app developers also delivering services on B2B and B2E apps also? Over to you, Bob.
Okay, thanks, Matt. Yeah, sorry, that was really just me being lazy with the examples that I was giving. It's just easier for me to give business to consumer examples when I'm doing these presentations. In fact, what we're seeing is it being used across the whole spectrum of different types of apps and different types of customers. B2B, B2E, internal apps used for employees across the whole spectrum. In fact, if anything, what we're seeing in the recent year is less business to consumer apps actually being built and more business to business or even internal apps for employee apps to improve business efficiency. So no, yeah, it's used very extensively across any sector, not just business to consumer.
Alrighty, thank you. We've got time for one more question here, and this question is from John. John has a question about pricing. Well, John, thanks that you've come to the right webinar. John says, the examples you give, are these actual charges that developers are charging, and what would a typical charge be for a fully managed service?
Yeah, thanks, John. That's quite a tough one to answer, to be honest, because there are so many elements that could actually be included within a fully managed service. One of the earlier webinars, I think it was webinar 2, where we really dived into what these services would typically involve. And one of the largest cost elements are probably going to be labor, not just the cost of your labor, but the amount of hours you need to include within the service to deliver whatever service you've committed to deliver for your client. It really can be anything from $250 a month, which is probably the cheapest that we're seeing, even some of the more the less developed markets. Anything up to, I've heard examples of people charging $10, $15, $20,000 a month for some of the larger customers. But within that, obviously, there's a lot of typically prepaid hours in there where they're buying a block of hours that they're then drawing down over a period of time. So as I said within this presentation, it's really difficult for me to actually say you should be charging round about this price. It depends so much on particularly the hours and the types of people that you need to involve from your business to deliver the service that you're committed to.
Okay, thanks for that, John. Thanks for that, Bob. We do have one more special offer here for everyone who's attended the webinar here, and that is for everyone who's attended. We do have a free 1-hour telephone consultation that's available to everybody who's been on the webinar today. The first five, so the first offer is going to be first come, first serve. And in this consultation, we'll get into a deeper dive. We'll fit the approach to the unique aspects of your business from what you've seen today, and we'll work with your wider management team in order to make your apps, the apps that you're developing, the best it can be. So if you want to get started with this, contact your sales representative or email info@cumulus.com and we'll get you started. But remember, there's the first five slots only, so kind of jump in when you can, or as soon as you can. And remember, thank you very much for attending the webinar. You can see all our webinars at www.cumulus.com/webinars, where you can see some of our webinars from the last couple months. And then our next webinar coming up is on November 30th. Be sure to register on our website also at cumulus.com/webinars. And today's webinar is being recorded, and it should be 99% chance will be available tomorrow on the website and also on our YouTube channel as well. You can reach us at info@cumulus.com. Also, we're on social media on Facebook and Twitter at Cumulus Cloud. And once again, thank you everyone for attending the webinar, and we'll see you next month on November 30th. Bye-bye.